Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment, we have a market which is testing a quite strong level of previous monthly resistance, which was acting as resistance all across that zone, which once again at the moment is acting as resistance. What we could expect in a situation like this is a test of that zone before then getting some potential bearish price action away from the area. Going down on the weekly, what do we have? From a weekly perspective, we can notice how the market is currently testing previous weekly resistance, which is now turned support. We got the test. Currently, the market is rejecting it to the upside, so more bullish price action could be expected away from this zone. However, at the same time, we must also notice how the previous high has now been tested. So from here, there is the possibility to see a bit of a bearish price action to be developed as at least a short-term rejection away from the zone. Also important to point out that since we have an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how precisely the market here tested exactly the 0.786, and currently it is rejecting it to the upside. And this is usually what happens. In fact, when you have the Fibonacci level that is lining up the best with structure, which in this case is this previous resistance turn support, essentially you have confluence of support at this area that comes both from the Fibonacci level and from the previous resistance turn support. Usually the market is attracted to these areas, which in fact we could expect the market to test and to reject. Going down on the daily, what do we see? Now, from a daily perspective, we can see a pretty strong impulse to the upside that has been created. And we can also notice how this red candle has been printed as well. This means that if from here we get the short-term move to the downside that we could potentially expect by looking at the weekly, since as we have seen previously, the market is testing the previous weekly high. At that point, if from here we get this move to the downside, we would have the creation of an M pattern. And after the creation of an M pattern, what you could expect is a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so what the non-commercials and the biggest institutions at the moment in the market are doing and how they're moving their orders, and we check specifically gold, what we can see is that with the last reports, at least in the short term, net positions have been decreased. We went from 160k to 105k net positions, with shorts that got increased and longs that got decreased from 256k to 210k, while shorts got increased from 96k to 104k. So there is the possibility for some short-term weakness here of gold, which at that point could potentially create this move to the downside. At the same time, however, in the long term, we can see a strong increase of the net positioning going from 64k all the way up to 105k net positions. So we see long-term bullish shifting of orders from an institutional perspective, but short-term bearish. This is exactly what we would like to see, because we would like to see a short-term move to the downside and then more longer-term bullish continuation. So if we do get this move to the downside and the creation of the M pattern, which we don't know if we will get it, but if we do get the creation of this M pattern, at that point, it would be quite interesting because we could have the possibility of looking for a potential rejection to the upside for the completion of the M pattern at the neckline. So if we do get the creation of this M pattern, how we could be approaching a potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So for our and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries, this kind of things, you want to learn more, I really suggest that you go and check out the mentorship program, which you can find at transparentfxtrading.com. In fact, now completely for free, you have the possibility to gain access to all my courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, develop market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that directly from here, by following these 3 easy steps, you have the possibility to get free access to the mentorship program. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.